You can't get too depressed this Masters week here. We're about an hour away from Augusta National where I sit. But yeah,
But you're
certainly, the
here right now.
volatility.
You're not playing
Yes,
golf or
I'm
watching
in front of
golf.
the screens.
Okay.
Yes, exactly. Unfortunately, but the volatility that we've seen does echo of. It reminds me of 2008 a little bit, which is not a good period.
Hmm.
Excuse me. You want to compare to in terms of the ups and downs. So it is very difficult to make sense of, and we've had a lot of client calls and interactions over the past 3 to 4 to 5 days, but certainly feels better when you get these rallies. But I would just note that a 9% rally that we had on Wednesday from the tariff pause, that's not the sign of a healthy market, even though it feels good
You're
because the
not you're
market's going
you're
up.
not the first person to say that to us. We've had, I'd say, probably 4 or 5 people say that's
Yeah.
not the sign of a healthy market.
No, right? Not at all. And it's, I didn't even look at the VIX today to kind of get an idea of where we were because we'd seen it pretty high today. It's amazing, a different market environment, what you look at and what you don't. VIX down almost 4 points. We're now just below 37, but, we've been as high as we were 60 on Monday.
60. Yeah.
Yeah. So I am curious, the clients who are calling you, the investors who are calling you, what are they asking and what are you doing as a result of it?
Yeah, so the first thing is the preparation and ahead of these events, right? Is having a diversified portfolio, mix of stocks and bonds. I know we'll talk about the bonds maybe in a minute.
Yeah.
But so you're not shocked in terms of what happens to your portfolio, and also the preparation for any cash needs that you have, being having that on the sidelines to begin with. So we're able to kind of talk through the circumstances and the situation to settle people back down. What we're trying to do is look for opportunities within long-term holdings that we have in our equity portfolio, as an example, and take advantage of these dislocations. I think we probably set or have a pretty good level for a bottom around that 48.25 level that we hit on Monday. That was actually the peak in 2020, late 2021, also the breakout level in early 23. So that seems like a good level on the downside, but at the same time, I think we're probably going to be capped on the upside from the breakdown level, which was around 5,600. So I think we're going to kind of be in this range for a little bit, but I am very much looking forward to listening to earnings calls, which I did today, of course, to hear what's happening in real time from management teams.
What's your takeaway? We had 3 banks report today. We had earlier this week, we heard from Delta. We've heard from Fastenal as well. What's your takeaway from the companies you've listened to?
Yeah, I think, both Jamie Dimon and Ted Peck, those are 2 I listened to. I also listened to Wells Fargo. I mean, I think they were more kind of level-headed, if you will. They acknowledge that we're in a slowing environment, both from a economic standpoint and a capital market standpoint. That's factored into their outlooks. But they're the messaging was, kind of, keep calm and carry on. And even, provided guidance, which was of a surprise a little bit with Jamie Dimon and JP Morgan providing guidance on net interest income, for example. So I would say better than feared, certainly. And you're seeing that reflected in the stocks moves today. But this is just the beginning. And so we're going to hear from a lot more management companies as we head into next week and the following weeks. And I think, the look back on first quarter is irrelevant. The look forward on what's happening right now and what they expect going forward is the real information that we're going to get here.
Well, Walter, if we get what Jamie predicts, is a lot of companies not and a lot of CEOs in the C-suite not willing to really commit to some outlooks. How do you commit new money, at least on the equity side of things? Do you not, and you wait until you start to get companies feeling confident again to put out outlooks?
Yeah, it's a great question, Carol. Jamie referenced, if the stock can, continue to come in, they would look to buy it on from stock buyback standpoint. So they have some confidence. But to answer your question, I think you got to be comfortable with a couple of things when you commit capital, regardless of maybe some uncertainty or lack of clarity as you look out over the next 3 to 6 months. It's understanding the companies that you own, why you own them, the management teams that run them, the confidence in them, and then you can look for levels to commit additional capital to those companies once if you know them correctly. If you don't know why you're in a name, if you've gotten into something more recently, you're not as familiar with it, you're more likely to sell it at the wrong time versus committing additional capital. JP Morgan's a name we've held for a number of years, and obviously with Jamie Dimon at the helm, we feel very comfortable committing capital. We actually bought some more Monday of this week on the downdraft. Yeah.
Okay, before you go, we promised we'd talk Treasuries here and what's going on in the bond market.
Kind of buried the lead here.
Well, if you look, we're actually seeing yields down at the long end on the 30-year and the 20-year, a reversal from what we saw earlier in the session. The 10-year at 446 right now. What's going on in your view in the bond market?
Yeah, the bonds are the tail wagging the equity dog right now. And I've been fascinated watching this chart. I wish I could share my screen with you, this intraday chart of the S&P and yields. And clearly the market's interpretation of these moves in yields is perhaps a lack of faith a little bit in U.S. assets. So earlier this week, we had all U.S. assets, currencies, rates, or bonds and equities all down. Yields up.
Right.
So that's not a good circumstance, and that's very unusual in times of market stress.